So Senseonics stock is another absolutely insane one, being up way more than 1,500% at the beginning of the year, while gapping up again after some pullbacks afterward. In fact, it's still up an astonishing 750% from the lows last year, despite currently recovering a bit from the second incredible 150% spikes we just mentioned. So what we are going to do today is give you an updated insight into what is happening to Senseonics stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, so let's start talking about the stock. And in the case of Senseonics, we're looking at one of the especially amongst investors most well-known manufacturers of glucose monitoring systems, or CGMs, which make the process of testing glucose considerably easier for diabetics. And, in addition to the remarkable progress Senseonics has made in commercializing its product line in the multi-billion-dollar diabetes market, there is one thing in particular that sets the company apart from its competitors, Senseonics Eversense XL product. And this commercialization of the Eversense XL product is pretty much what most investors are betting on right now. But the incredible spikes we've seen recently, however, are pretty much caused by a completely different reason: some massive hype amongst investors. Indeed, this incredible excitement caused the stock to soar more than 1,500% at the beginning of the year, in addition to the recent 150% recoveries we've seen following the first pullbacks. But it was the stock's excellent conditions before it broke out that allowed all of this to happen. As said before, the short squeeze was possible by its high short interest of more than 25%, while the single-digit price and small float of just 280 million shares at the time made Senseonics stock equivalent to most meme stocks that had lately gapped up some massive amounts. But this isn't the only thing that seems really appealing at the company. And taking a deeper look at the financials, for example, it quickly becomes apparent that it's definitely going in a good direction here as well. The company brought in about $3 million in income, representing a staggering increase of over 7,000% year over year. And, with cash on hand of nearly $200 million and debt of only $110 million, the company's revenue expectations of $15 million seem pretty reasonable. However, and this is important to consider for our prediction at the end of the video, these devices haven't just attracted the attention of investors. In fact, Essentia, a prominent player in the worldwide diabetic care market, has recently partnered up with Senseonics. And as part of their deal, they agreed to distribute the Eversense XL product across Europe, opening up a large new market with enormous potential and opportunity. Furthermore, Essentia has extensive experience in the industry, which will be especially beneficial in establishing the brand in Europe, while Senseonics, on the other hand, has a number of significant advantages over its competitors in the United States. The Eversense XL device, for example, is actually the first long-term implantable glucose monitoring system, as boldly claimed on their website, being able to remain in place for more than 3 months, an astonishing improvement over the usual 14 days period. So taking everything into account, Senseonics has a bright future, particularly in the rapidly rising diabetes market. However, you should keep in mind that there are still significant execution risks with the stock, and investors will need to witness further growth to justify the recent price gains, which came with a lot of volatility. But, as we previously said, the stock has been definitely moving in the right direction, explaining the growth that's very likely to continue. Additionally, we got a really solid product line, being able to lead the global diabetic care market with some unique features which give it the edge over its competition. Alright, with that being it for today's video, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot, and see you next time.